Go live. Yes, we are live now. Okay, okay, we are live, and yet I can't see the cross posting button anywhere. So I really
No, it's
don't know
fine.
how to cross post this.
Yeah, yeah, it's
Yeah.
okay. It's okay. Let's just do it from your Facebook page.
Okay. I'll figure out how to cross post it to your page in the future. But hey, how's everyone doing? Type in hi if you can hear us. Sorry for being a bit late because we were setting up just now. But I think today is a very interesting day in the market. Blood on the street, right?
Yes.
And despite yesterday, super good result from yesterday. Yet the share price of the glove counters actually kept dropping until now. So
Yeah, Meng Teck,
what's
why is that? Why is that, Meng Teck? Before you ask me, I want to ask you first.
uh, why? You ask me why is the share price dropping? Is it for the glove
Yeah,
counters? We have
everything.
Michael Chan here saying hello.
Hello, hi
Unreason
everyone.
why. Don't know why. Amir say hello, Rondy and Meng Teck. Vincent say hi. Hi everyone.
Hi
So
guys.
why? I also don't know. In fact, today I actually asked Lucas. Okay, today I sent a message to Lucas. There's a new term
Mm.
now in the market. I wonder whether you are aware of that. There's a new term called Hood 9E. Have you seen this term before? Hood 9E.
Yeah. I have seen it recently. Yeah, it's only like the past 1 week or something.
Yeah, you know what it means or not?
I do.
Yeah,
Um, my Chinese is not good, but it's not that bad also lah.
yeah. This is actually Hokkien a bit. So a
Yeah.
hood cow, yeah, this one means, so I asked Lucas, hey, because Supermax, they all come out with so good result, then talk about want to do face mask, then put what ASP not factor in yet. Then if we look at the earning per share, it's like 30 cents for this quarter. That means
Mm.
even without factoring in any additional ASP increase, it's gonna be 1 ringgit 20 cent earning per share for
Yep.
Supermax. Even the P of 10, this share is gonna be like $12,
Yep.
right? So there's like almost a 50% upside from here. Looking from if we use a P of 10,
Mm-hmm.
which is super reasonable if this is a long-term trend, it's gonna PE 2031, by right? Yeah,
Yep.
but in the market as a whole, maybe they have a different thoughts. But later I'll share more on that. Hey guys, we have 177 viewers and live attendee here. Type in super if you want to hear super good content here. Right? Type in super. If we can hit 400, then we will be really happy. If every time consistently 400, I can bring a lot of super good guests for you, including Rondy. So Stephen Tong here asks, good evening, Rondy and Meng Teck. Hey, good evening to you too, Stephen.
Good evening, guys.
So I'm aware that Stockbit posted on Hata result and also posted on Supermax result.
Yes.
And now I know what you guys mean by, once the skeptics see the result, they may
Mm.
change their view. Yeah, I'm
Yep.
one of those. I never expected the earnings to go up
Mm.
30 times, This is
Mm.
like unbelievable, man.
Crazy,
But
right?
lucky for me, yeah, it's like crazy. But lucky for me, the share price hasn't shoot up yet. So if I want to collect, I can. And now
Mm.
I'm no longer such a big bear on the glove.
So I understand that I went to listen to one of your Facebook live, and you
Mm.
mentioned that you're finally going long on rubber glove. Is it? You bought
Yeah, yeah.
Riverstone, is it?
Yeah, I bought Riverstone in September when it was three
Oh,
something, 350,
okay.
330. Okay lah, not a super good gain also lah, but it's not
it's
bad, right? It's Sing
it's
dollar.
a it's a good price because I mean, I think in the beginning it was from May. It went from 1 to about, I don't know. I think there has been like 2 recent corrections. So you got in at the second or third correction, I suppose.
Yep.
Mm.
Yep. Hey, can everybody press the love button so that we can reach more people? Because today's conversation is gonna be super interesting. It's all about glove and then some tech counters and I'll be sharing some interesting tech counters that I myself am buying, right? So
Yeah. Hold on, let me just.
So today, guys, how many of you got stuck in the rubber glove counters? Those from Facebook, how many of you got stuck on rubber glove counters? Type in stuck. Actually, Lucas, today Lucas shared with me something. He just shared with me, hey, luckily we did the price in tutorial because last Sunday, Lucas came on my Facebook Live and he shared this thing called price in. That means sometimes share price already go up so much. When they actually release the good result, the share price actually drop, right? Just like JF Tech, right? JF Tech went from very, very low price. How many of you bought JF Tech? Type in JF, right? And then it shoot up like double, triple. I think in fact the share price went up fivefold. Then after that, this JF Tech, after they released the news of Huawei partnership, the share price are dropping. So in fact, a lot of people already know about this Huawei thing. I don't know lah. Maybe they were rumors or what. So they bought in and they, goreng the stock up. Then once the official news is released, people start taking profit. And I believe this could be the same thing that is happening to the glove counters over and over again. Yeah.
I don't really agree with that actually, Meng Teck. I think with glove, it is not. I mean, yeah, fine. In terms of the result, it is. People can predict it, and some people will get it right, and some people will get it wrong, right? But I believe that the market for the gloves are so big that it is not easy to manipulate. So I would say that the price movements of glove is very much on sentiment base, and it's very much on fund flows base. If let's say the the institution starts buying, and then it will move up. If the retailer starts selling, it will move down. It's more dynamic than just insider information and what information that I have before the market knows and all these sort of things.
Yep,
but I do agree that in Malaysia, especially this year, there has been just too many instances where other counters, not the rubber gloves, other counters, it is just people with insider or rather like privileged information. They just goreng the stock up, and once the result is out, and then they just sell on news.
Yes.
Yeah.
Hold on, I'm looking into cross post share to any place. Wait. I think we can see. Oh, I found a cross posting button, man. We
okay.
are live on Facebook page as well. I think so. Yeah. Okay, good.
Thanks.
Now that we got all the tech thing out of the way, we can focus fully on discussion on stocks. Actually, I got a special thoughts on stocks, on glove stocks as to why it dropped. But actually, this is just gossip only, just talk for fun only. Don't read too much into it. In fact, it's counterproductive to always speculate on why the share price drops. Sometimes it just drops because of no reason. The market just want to give you a bargain. But maybe, do you follow our ex-Prime Minister, Najib, the Facebook page?
No, I don't. But I know that recently he's been talking about gloves.
Yep.
But yeah, what does his Facebook page? How does that link to rubber glove?
Yeah. So this is what I think. So let me share my screen on his page. Let's make him more famous. I'll share the screen and we have a read together. Najib Razak. Okay. Yep. So in his post, he's typing in Malay. I think you can read, right? You're from Indonesia. He say the total profit went up 18-fold, right, compared to last year. And then now it's even higher than Tenaga, right? And they use the money to buy back shares and Supermax as well, right? And now he's like, you can see from his message, he's sort of like targeting them already because he's saying they are buying back the share to benefit shareholder, but not the masyarakat is what? Community, not the community. And I plead these companies to do more CSR, to contribute their money to COVID Malaysia. It gives a little bit of indication that they think these companies are making too much money, and they give a little bit back. I think this is one of the big worry. If
like
they
windfall tax and all that, is it?
possible, and this is not speculation, or this is already expressed interest, and we all know how powerful he is in the vaccine. Yeah.
I think okay, maybe the first topic that we should talk about today is perhaps let's talk about gloves, right? So I think let's just lay down everything now with regards to glove. Like, what are the pros and cons of investing in glove, right?
Sure. Maybe you start first.
Yeah. So I think it's very, very well documented. There are there is basically those people that goes for glove, and there are people that goes against glove, and it has become like an argument now. Last time it used to be, technical analysis is better than fundamental analysis, but now the argument in the market is like, yeah, glove is going to keep going up, and on the other side it's like, no way, glove is just gonna be going down, right? So let me just lay down the reasons on each kind of like side. So for you, if let's say you are a glove bull, right? So these are basically the arguments. Number one is that they have a very clear earnings visibility for the next 4 quarters. I think if I'm not mistaken, the latest result is saying there is going to be a clear earnings visibility all the way until the end of next year. And the order book is that full. Means if let's say you order today, you are only going to get your gloves like at the end of next year. So that's number one, right? It's record earnings for the next 4 quarters. And then other than that, when people are ordering the glove, they have to pay upfront. So there is basically a huge windfall of cash into the glove counters. So that's number two. There is a huge cash in hand, right? Because the deposits have to be paid for you to confirm your order. So that's number two. So you're like already a bank, all these rubber glove players, they have cash amount that are probably, it's crazy. It's negative working capital, right?
Yep.
And then number three, it's basically what are you going to do with this cash? Is there going to be an increment in dividend? Yeah, perhaps. So it could be a yield play as well. And then number four is average selling price. Average selling price, if I'm not mistaken, until today it has not come down yet. It has always, and it has been continuing to go up. If I'm not mistaken, it has actually slowed down for a little bit. The growth has slowed down, but due to the global spike of COVID again, it is actually now back up, and it's accelerating again in terms of the increment of average selling price. Okay, and of course, all these glove players, they are adding more capacity. Okay, and other than that, what other thing is there? Yeah, and of course, even after COVID is, if even let's just say the vaccine is found, the demand for gloves are still going to be high because there is going to be people that administer the vaccine, and for you to administer the vaccine, you still need gloves, right? And lastly is, even let's just say after the vaccine is out, there is going to be already like a change of behavior in the global population and their hygiene awareness. So these are basically the case for gloves, I would say, right? Now, on the other side, is basically people are talking about, okay, no, those are good, valid points, but these are my points. All right. So number one, of course, whenever the vaccine news is out, as you can see from Russian vaccine la, China vaccine la, it always kind of like reduce, or rather, it leads to a reduction in the glove prices, because these are sort of news that is detrimental to the prices of gloves. So that's number one. If let's say the vaccine approved, then the time frame of your average selling price, number two, is going to slow down and it's going to reduce. And then basically it's going to normalize. The average selling price is not going to keep going up. Your supernormal profit finally stops at the level. And then, of course, other than that is some people are still arguing that, oh, these glove counters are still expensive. But I mean, for that, I can actually argue. Like, I don't personally think that the glove counters are expensive right now. But yeah, some people are still saying that it is expensive. Next is basically the shortage of supply of the butadiene rubber, right? Nitrile butadiene rubber. So that is going to be a potential of a higher raw material cost and that. And then after that is oversupply of glove because all these new entrants are coming in. The other day I was just doing a breakdown of all these rubber glove wannabes in Malaysia, right? All these counters that had decided to go into gloves, and there are easily 15 names, and I'm sure that more are going to come. So these are the sort of like the oversupply argument. Yeah, so these are basically the case against gloves, right? And of course, there is another one which is saying that yeah, those are the other things such as the labor lah and windfall tax lah, and maybe a weaker US dollars lah, all these sort of thing. And with all these two cases of whether you are for gloves or against gloves, at the end of the day, you have to decide for yourself which side are you on. Yeah.
Yep.
But I think for me personally, I have been talking about gloves. You can see in Stockbit as well, all the way from January. Even when we had Facebook Live, I think back in April or May, I was like hopping on about gloves, right? I was telling you, hey, Meng Teck, go and buy Riverstone. It's only $1.18 dollars.
Since a long time, I'm like, okay, let me monitor a bit first. Let me see this story. Then the time where I actually enter is like 3.3. I'm like, when it goes to 4 something, I'm like, I'm so stupid, man. Then when it drops to 3 point something, I'm like, this is my chance, right?
Yeah. So I have been talking about gloves all the way from January, and it really has gone through various cycles lah. I feel like I have actually learned a lot in this short span of time. I have never experienced such a bull in my life. Yeah, but at where we are currently, I think there is definitely a case still for glove. I'm actually, if let's say there is a barometer on whether you're bearish of glove, which is 0, and I'm bullish of glove, which is like 10, I would say that I'm probably sitting at about 7.5, right?
Wow.
And I think from the very beginning, I have always mentioned that glove is like a sector, and the counters are those counters that you need to have in your portfolio, and that this is basically a thematic investment, right? This is a thematic investment. But again, I'm not one of those crazy people, or I'm not really like 10 out of 10 bullish on glove, where I don't think that you should always keep your glove and don't sell it. I always I feel like yes, you should be invested in glove. You should actually have 2 portfolios, in my opinion. I have always told my friends this, like, you should actually have 2 portfolios in gloves. One is like those hold to maturity portfolio, and the other one is like those asset for sale portfolio, in a sense that, yeah, you can actually buy low, sell high, buy low, sell high. And trading on fear and greed, that is on the trading part. But there should be always a portion of your portfolio that is invested in glove for the longer term, for the medium to long term, based on the theme.
Yep.
Yeah.
I agree. Actually, I don't have much comment now, because seeing the profit of those glove companies, especially Supermax, really is unexpectedly high. If they can sustain like this for 3-4 years, I think even now, even let's say in the bad case where after this COVID situation, after the vaccine, the profit goes back to the past, I think this current price is still not very, very overvalued because of the big profit that they are making. If we look at it, the earning per share now compared to the share price, the PE ratio is 5 to 6 only. So do you think they can sustain this profit for the next 2-3 years? It's pretty much secure, Adima, isn't it?
You mean like the supernormal profit, is it? Supernormal profit, I believe they can still sustain it. Definitely for 2021, they can. I feel like 2022, it's still very cloudy, but I would say that they will still have supernormal profit. But whether it is going to be better than 2021, to be honest, I am not too sure. I'm not too sure.
One
But
thing
there
is,
is definitely going to be a plateau. There's going to be a level where the average selling price stop increasing.
but if everybody is gonna go and get the vaccine, isn't the usage gonna be even much higher than now?
Yes, I think so. So, for instance, if let's just assume that there's a vaccine by beginning of next year, and once there's a vaccine, I think what is going to happen is average selling price is going to either slow down or it is going to be stagnant, and over time it's going to drop, right? Because there is finally an end to the pandemic, or rather, people perceive there is going to be an end to the pandemic. And then what is going to happen subsequently is that now all the people in the world have to be, they need to get they need to get vaccinated. And in order for you to do that, you actually still need gloves. So the glove demand is still going to sustain for a long period of time. But it's just that the average selling price is not going to be keep going up. So yeah, there is definitely going to be super normal profit still.
Yeah, and my view now is, if you ask me long-term wise, if we buy at this price, it actually depends on what counter. Also, I don't know about all the counters. I only know about Riverstone, Supermax. At this current price, especially Riverstone, it only tripled a bit only, right? So it's the counter that hasn't go up the most, and yet they have been consistently, even before this COVID, scaling up their operation, right? So, and based on the investor briefing last time, they are able to increase the average selling price every single month. I forgot the name. Every 2 weeks, they're increasing it, and that hasn't even been factored into the result yet. So, if you look at the profit that they'll make in the next few years, I think that profit itself could cover the share price increase. Just based on the cash value itself, could cover a big portion of the share price increase. So it's actually the safety there.
Really? I don't know. I'm not too sure about that. I think the number of cash that they're going to receive as compared to the market cap, it's still a very, very big gap. There is still going to be a very big gap there. But yeah, I mean, I agree with your points. But I mean, yeah, I'm just wondering, would you actually be buying Supermax because it's a cheaper stock right now?
Okay, I'll share with you. My point of view is, glove for me now is still something that I will use it for trading.
Yep.
Because what I'm afraid, because I don't buy into the super long-term theory. I'll buy in the 2-3 years thematic story, right? Yep. So if it's only for 2-3 years, it's very hard to tell how the market will react, right? Let's say if the market, those big, super big fund, they are already pricing in things that will be happening, the value 5 years from now, right? Even though they are still having the profit growth, all this, but they're already pricing in the potential ASP drop, right? So I've been through some training done by fund manager, UOB Kehian. I don't want to mention which fund manager. Even that fund manager himself is saying, glove now is very dangerous. So this means the fund manager from these kind of companies, they are wary of the glove stocks as well. Even though, by right, they should be adding, let's say, for portfolio management, but they are wary of the high valuation as well. But going back to the point just now where I say a huge chunk of their share price will be in cash value at the end. You just look at Supermax. Supermax has PE of let's say right now price is $8. They are making $1.20, and it's all cash, right? So if they can do this for 2-3 years, right, that's 3 ringgit 60 cent cash value from the 8 ringgit share price.
Yeah, and it will reduce the PE ratio. I mean, the X cash PE ratio will reduce for sure.
Yeah, the PE over EBITDA is only like, I mean, the real price that you're paying is like $4 something for the long-term business. So I think it's not that expensive when you look at it that way. Now, when you look at it that way, not that expensive. And but if you ask me, keep for long term, am I sure to make a lot of money from it? It's very uncertain for me. But I do think that this stock right now at this current valuation with the team, all this, still got room to go on. Okay, I personally think, but the entry point is important. No? So my strategy is different. I look at it more from, okay, FA wise, I think no problem, at least Supermax. But it's definitely I must look at the TA. Whenever it shows this is downtrend and bearish, get out. When it starts to show sideways and potential to go up, that's when I get in. So it's already fulfilled my FA side for the short term. Now I'm just following it with TA side and risk management.
So what happened if, let's say, your Riverstone, right? It suddenly went on a very bearish run and it becomes like below 3. Are you going to cut loss, or are you still gonna keep it?
I will cut loss, but definitely not when it's like below 3. Much earlier, unless it get down. So because the share price will drop in one day most of the time, it will show some sign like MACD cross or lower low, lower high. That's when you get out. So for me, I'm using it to get in, get out, get in, get out. And it's quite interesting, man. These stocks, volatile stocks, pretty fun to trade on. I mean, in the past, recently, it's very boring.
It is actually very fun to trade because, I mean, for everyone, I mean, Meng Teck is in my kind of like a close circle. So he receives like my broadcast list, right? And I've been telling him, that I think during the first correction after the Supermax result and the Russian vaccine news, every single day was just like selling for like one entire week. And every single day I was buying. And then after that, what happened is after Top Glove result, right? After Top Glove result, also had the same thing happen. It was just selling. But I mean, if you remember correctly, Meng Teck, I only told you to start buying when it was lower than the previous low, right? Then there was like a real panic, You can actually feel the panic everywhere with the rubber gloves, And I feel like with this rubber glove, you can easily trade it whenever you feel like that freaking like nervous gut, right? It's like, oh my god, everything is just dying. That is actually the best time to buy when the fear is that.
I agree with you on this point. Yeah.
Yeah.
So, I shared some of my experience trading cannabis stock last time. You know how I trade cannabis stock last time? Because the best period of trading year I've ever had is in year 2018. Trading the cannabis stock is super accurate. When I go in, that's like almost before the share price go up. When I exit, that's almost before the share price goes down. And I only do two things. I use technical analysis, and I use a WhatsApp group. But the WhatsApp group that I use is not how to say. I look at the info. I just look at what's other people's reaction, because I know in the WhatsApp group mostly they are beginner retailers, right? And cannabis counter back then was a lot controlled by retailers,
Yeah.
When they are all panicking, right? And everybody says, "Oh, let's close our laptop today. Let's not play. Don't look at it." That's when I start buying.
Yeah.
When everybody say, "Oh, I made so much money. Come back. This is it." That's when I start trimming off my profit. I just do opposite of what everybody do. And that's how I make very good profit.
Yeah, it's very true.
In glove, currently, if you know how to do a little bit of analysis, I think it's a good strategy as well.
I mean, okay, like for me, personally, because I get these questions a lot of time, like if let's say you still do not have any glove counter, which glove counter can you pick, or whether you can still invest if let's say you want to invest, right? And I always mention that if let's say you are supposed to invest in one glove counter, if let's say you give me 100,000 to invest in like one rubber glove counter, right? I would tell them that I would not actually invest in Supermax. I would actually only invest either in Harta Lega, Top Glove, or Riverstone. Only one of these three. Okay, and the reason is because it's not because that Supermax is cheap, right? Because I mean Supermax is very cheap, so by right I should be going for the cheapest stock. But in my opinion, if let's say you give me 100,000 to invest in one rubber glove counter, and for me to hold this for over a period of let's just say 6 months to a year, right, I would definitely pick the other three: Riverstone, Harta Lega, or Top Glove. The only reason why I do that is because I just feel like these three, the quality of their earnings is more sustainable, and it breaks down towards number one, the management and the business model, relationships with clients, and just the sheer innovation and technology of their production, all these sort of things lah. Yeah. I mean, a lot of people also wonder, why not Kosan, right? But I think for me personally, Kosan is like a follower, like if you remember last time when we had our live in April or May, I told you that I had two rubber glove counter, I had three: Riverstone, Kosan, and Top Glove. But ever since I took profit entirely on my Kosan, I realized that Kosan is a little bit of a laggard. And Kosan, although they have clean room gloves, which actually is very much in demand right now, and which is exactly why I chose Riverstone over Kosan.
Maybe
is
later
because
you
of
can a little
clean
bit
room.
why is clean room glove so in demand? But you continue your point first.
Yes, so so that is why I would pick Riverstone over Kosan. And I also feel like another strong point that you need to consider also is basically the generation, like who is actually managing the company, right? I feel like in terms of generation wise, I feel like Kosan, I mean, the Tan Sri is a little bit older, and who is going to take over after him? It's still a little bit of a question mark, But at least we know Harta Lega, the son is already running it, and Top Glove, there is plenty of capable people of doing it. And Riverstone, I think the owner is still not very old as well, so I think there is still a longevity in that sense, lah.
Yeah. So in terms of long-term investment grade glove stocks, right? I think even since before COVID, many people already identify out Top Glove, Hata, and Riverstone. But Riverstone actually don't get a lot of love because they're in Singapore and not a lot of people look at it. And they're sort of like a Singapore discount. And now everybody say, oh, if Supermax go and list in Singapore, would they get better pricing, better valuation? Actually, this one is very uncertain because if you look at Riverstone, you will know already. It's actually not very much love there, not as much as in Malaysia. So I don't know whether this will push up the valuation of Supermax as well. But maybe you can share a little bit why is the clean room glove, higher in demand now? Is it related to COVID or is it more on tech?
It's more on tech, because I think clean room gloves all this while so I think everybody needs to understand that there are different types of gloves. Even sometimes it is actually quite comical that there are some news in the newspaper of like a listed company who wants to take over a glove to become a rubber glove manufacturer. But it's quite comical in a sense that when they target these rubber glove players, right, they are not even producing healthcare gloves. They're, for instance, producing some gardening glove or industrial glove and all this sort of thing. So these are they are totally different. They are not healthcare glove. It's not compatible, right? What we are looking at and what has been in demand is basically healthcare nitrile glove. So that's very much in demand. But for Riverstone, they actually have, I think, if I'm not mistaken, I cannot remember. I think either 10 or 20% of their production is in clean room gloves. Now, clean room gloves on normal occasion is always being sold to technology manufacturer, like all the semiconductor guys, right? Because these are the gloves that is being used in like clean room level 100 or 1000. So that is clean room glove lah. And as you guys know, nowadays a lot of tech stocks and tech manufacturing stocks are on the rise, and I think that has finally moved the prices of clean room gloves of late. And I think this price of clean room gloves is very sustainable. Yeah.
Maybe you can share a little bit on the tech side. Actually, I've been looking on the tech stocks also. I don't know why is their revenue and earnings having a catalyst, especially right now. Is it a coincidence, or did this whole pandemic thing sort of accelerated the tech stocks? I can't see the correlation. The pandemic will accelerate them.
Sorry, Meng Teck, you broke out a little bit. What's the question again?
My question is, why would the tech stocks suddenly have more revenue, more profit in this period, as in the Malaysia manufacturing tech stocks? What is the thing driving them? I don't see why the pandemic will suddenly boost the thing that, boost the demand of these tech stocks. They are not the software stocks, They are not the online work from home stocks. They are the tech stocks. Those are making electronics, all this.
Yeah.
Why is there acceleration right now?
I think definitely a big part of it is the U.S.-China trade war. I would say that's the biggest part of the reason why. Maybe let me just give you an example of a stock that has been discussed quite heavily in StockBit of late, right? It's basically PIE, P-I-E. It's an example. I just want to give you an example. So, for instance, PIE. So there is a verified user in StockBit who is very bullish on PIE, and the reason why is because the parent company of PIE, which is Foxconn, they because of the U.S.-China trade war, they actually have shifted the production of PlayStation and Nintendo into the PIE in Malaysia, and therefore, right now, because of that particular windfall, right now the company is manufacturing this, and the factory is very busy 24/7 manufacturing PlayStations and Nintendos and all that. So I think this is just an example. And there are a lot more various stocks which are facing the similar trend. Of course, these are the EMS players. Other than that, if let's say you're talking about the HDD players like Dufu and all that, we all know why these guys have kind of like a strong demand, and why their prices surge is because just plainly due to the digitalization of and the internet era, the speed of the internet era, or the adoption of the internet era and digitalization due to COVID.
Yep.
Are you invested in any tech stocks, Meng Teck?
In Malaysia? No, but in US, yes. In US, yes.
It's like first line for manufacturers as well.
No, not in manufacturers, but in software stocks, Square, C Limited, CrowdStrike. All these are really, because if I'm investing in US, right, usually it's more for long term, and I look at it as a really, really secure, really, really solid long term counters, right? Maybe later, if we have some time, we can talk a little bit about that. But maybe because just now you were talking about PIE, right? Maybe let me check the PIE. I'm sure, based on the surface, people will look at the PIE and it will look expensive one. Is it? PIE? Yeah, P ratio 28 something. Because many people may not know about this PlayStation being made here, all these things. And in fact,
I also didn't know. I only found out recently because of StockBit. Because StockBit is a place where people kind of like share contents.
Yep.
So I sometimes get a lot of my informations from StockBit lah.
Yeah. Also, Johor Tin that you shared with us. Are you the one that? Yeah, Johor Tin, you're the one that shared with me, right? Yeah.
Yes.
That's why, guys, if you want to go and find out more information, like all this special information, right, to catch stocks that based on FA, you wouldn't know why the share price is going up because it haven't been shown in the result and report yet. And especially Malaysia company, a lot of it, they actually don't tell you everything that they are doing, right? On the maybe they'll tell you when the quarterly result is out. So StockBit is a very good place for you to start to get this kind of information. So if you'd like to follow Rondy on StockBit, you can go to the link above, right?
Follow
Or the
me
link.
also.
Yeah, I already put the link there. You just click the link, create an account, and follow Rondy, and he will share very interesting thing with you. Okay. Anything else to share about glove stocks before we move on to tech counters? Anything you want to share with the follower? Because there's a lot of question coming in, but everybody's asking about what's the intrinsic value, right price to buy Riverstone, how about OK Plus. I think all these they can find all this information in StockBit, but it's also not convenient for us to share like because everybody have their own price point.
Yeah, again, I think for gloves, it's coming back to my earlier point where I laid out whether you are going to be for gloves or against gloves. It's really up to you on which side you are going to be on. Of course, if let's say you're going to enter at a price which is around right now, your risk is higher than, for instance, myself or those people that had entered much earlier. But there is definitely still a case for glove, in my opinion. I believe that the previous all-time high, especially for the first tier counters, I personally think that they will be toppled. I think they will be toppled. Yeah, I just have I feel strongly that they will actually achieve new highs again lah. I'm not sure whether it's gonna be next month or next quarter, but I do have a feeling they will come to a point where it's going to reach a new high.
I'm mixed on that because even though I believe that their earnings strength will be super strong and based on the valuation from the portfolio, it looks super cheap. But I don't know how the market will react when there's a vaccine news, right? Because as you know, market, if no matter what's the FA, if market want to throw, they'll just throw. They don't look at anything when they want to throw, right?
Yeah.
Just like back in March. So market can overreact. So I really am mixed. But that said, I believe that right now the gloves are a little bit beaten down, and I feel that now is a bit of opportunity to collect them while they are cheap, right? While they are still not as high, and they have been sideways for some time. A lot of the share need to go up, then sideways for some time before breaking up again. So we'll see from that. But for me, I will always follow TA. TA for me now on gloves is my number one guide. But maybe here you can share a little bit on Asia Apply, because Asia Apply just released result today, and yeah.
Asia Apply result, I think it's okay, it's good, but it's not bombastic. I mean, it's not like 7 million or 8 million, which is that would be quite a statement lah. But I think 4 million is okay. 4 million is within expectation. With Asia Apply, I think this is a counter that have actually shifted in a sense that last time it was a counter that was on the down, but COVID happened, and really because of COVID, they actually are entering into a transformation phase. In a sense that now this stock, you can actually see there is actually a clear earnings visibility even for Asia Apply until I would say the first half of next year. I think it's a stock that you can just put on it lah, especially if your entry price is low. Yeah.
Thank you, Rondy, for sharing. How about Lot Chemical Titan and maybe Lux Chem?
You mean LC Titan?
Yeah.
I mean, LC Titan from the very beginning, I know that LC Titan recently has been on the uptrend until today, but I I personally didn't invest in LC Titan at all because I don't know, I shared in StockBit, the spread level between naphtha and polyethylene. I saw people talking about how this particular quarter they can reach like 300 million of net profit and all that, but when I saw the spread of naphtha and against the polyethylene, the PE and naphtha, the spread, I was comparing it to basically those quarters in which they have at least 200 million and above, right? And when I compare it next to each other, I just felt that 300 million is a little bit of a stretch. So that's why I thought that this probably is just a good counter to trade because of the stories that has been carried around. But if, let's say, there was too much hype on it to achieve such a result that is probably it was
Difficult to.
it was difficult to achieve lah in the first place.
Yep.
I mean but that's just my personal viewpoint lah.
Okay. Yeah, so let's move on to tech counters, right? What are the US tech counters that you have been buying? I know you have been talking about Tesla for the longest time. You've been saying Tesla, Tesla, Tesla. Even in our retreat, like 1 or 2 years ago, you've been telling, buy Tesla now. Tesla is a super cheap, super cheap. You were telling about Tesla when it was about $200 before the share split, you know.
Yeah, I've been talking about Tesla since 2018. I think
like 10 times, you know, going up.
Yeah, and I think in 2019 during Meng Teck's retreat, I went there, and Tesla was like trading at 170. I was actually underwater. I was like 50% underwater on Tesla, and I just keep telling people, yeah, just buy. You know, it's a generational stock. It's a big disruptive stock, right? And just buy and have some faith, and you will see that the market will finally understand that what it's trying to do. Because for the longest time, people are looking at Tesla as if it is just a car manufacturer, right? But I feel like, especially this year, people had started to realize that Tesla is not just a car manufacturer, right? Okay, personally for me, investing in Tesla is definitely the biggest portion of my portfolio. And the reason why is, let me just share with everybody, is because Tesla is one counter that you invest in, which basically you feel like you're investing in 8 to 9 counters, right? Because Tesla is, okay, ultimately, in my opinion, Tesla is an energy company first. They're an energy company, and they sell a family of products that, number one, consume energy, which is cars, right? Number two, produce energy, which is solar.
Right.
Number three, they store energy, which is the battery, right? So these are like the trifecta on why I invest in Tesla, and why Tesla is more than just a car company. It is actually all this it's an energy company, and it covers 3 different types of processes and chains in the energy industry. And not only that, it is also a technology company. It's basically internet on wheels, right? It's basically autonomy and self-driving. Yeah. So again, as I mentioned, I feel like investing in Tesla is investing investing 9 companies in one company. 9 startup companies into one company. And yeah, I think that's the realization that the market had this year, and therefore the stock just went off the roof lah.
But is Tesla worth buying now?
Did you buy Tesla at all, Meng Teck?
No.
Why don't you, I understand you trade on options, right?
Yeah.
Yeah, why don't you just like sell a put on Tesla or something at a interesting price?
Very far or near?
Up to you lah. whatever price that you feel you want to buy it in the company.
The reason why I haven't got into Tesla is I haven't actually been able to calculate what's the rough value of the company. I know it has very good potential, but I cannot put a value on it. So if I were to go into Tesla, for me, it will be just buy a bit like the method that you mentioned. Just buy a bit over time, no matter what price. Just buy a bit over time, right?
Yeah.
But for because I have counters that I know, okay, this will be the value, at least will be here, and it's very attractive now. So I rather trade those counters than Tesla. I know Tesla is good, but I do not know what's a right value or what right price to go in. But for the other C Limited, CrowdStrike, those I really understand, and I can place a value on them, and I can really see a very clear visibility into their next 3 or 5 years.
Yeah. So I agree. I personally also can't really wrap my head around the valuation of Tesla. But I think that in itself is not really a bad point, right? It's the same point as if how the biggest risk of Tesla is Elon Musk. If let's say Elon Musk is no longer there, then what are you going to do as a Tesla investor? I felt that a lot of people think that that is a bad point, but in my opinion, that is actually a plus point in the sense that I want to invest in a company where, the leader is, I want to invest in him, so that's that. Yeah, again, it's very difficult to wrap around the valuation of Tesla. You really need to understand the business and what it is trying to disrupt, okay, let's just talk about automotive industry, right? Automotive industry, how many $1 trillion industry is that, right? So Tesla is trying to disrupt onto that. And then autonomous driving, there has not even been, it is still an uncharted territory. And Tesla is definitely beating Uber and Google or Waymo and Amazon into self-driving. What is going to be the value of self-driving? How can you value? Okay, for instance, I'm not sure if I'm not sure if you have any friends in US, but I do have a few good friends in US, and they recently bought a Tesla like Model Y, right? So they actually really drove all the way from San Francisco all the way to New York, and they can tell me that just along the highway, it is just only on autopilot, and the amount that they are willing to pay for that convenience, for that stress-free driving, it's you can't really put a cash figure into that, right? So I think there is a big value in terms of autonomous driving. Even Elon Musk himself said that in his latest earnings release, which is a few weeks ago, he actually mentioned, because a lot of the Wall Street analysts are talking to him about the margin of the cars, the margin of this, and the margin of that. But he actually said things. What did he say, man? He specifically mentioned something like this. He said, like, all these margin talks that we are all having, they are all going to look comically small when you factor in autonomy, So Tesla is a mission statement company, right? Number one, they are really trying to make vehicle goes electric, EV, right? That's number one. That's their mission statement. That is why there is no such thing as average selling price to go up all the time. There is no such thing as that, because on the contrary, he actually is trying to reduce the average selling price. So there is more people who is moving into electric vehicle. So that's number one. And number two, in terms of the margin, the margin from the cars are probably going to be squeezed. But the big profit, kind of like Pandora box, is going to be from autonomous driving, because these are really fat margin businesses going forward. So in terms of valuing Tesla, it's very, very difficult to wrap your head around it. But for me, I just actually ask myself a question, the question that I ask myself is just, do you think that in 10 years' time, Tesla is going to be a $1 trillion market capitalization company? And, if I look into the company, I look into the people who is working into the company, all the smartest people in US, right? All the smartest engineers, all the smartest scientists, they all wants to work for Tesla, okay? So the smartest people are in Tesla, right? And they are so laser focused on what they are trying to achieve. And they are just so disruptive in terms of what they are trying to do. Then after I compile everything, and I just feel like, I believe that in 10 years' time, Tesla can definitely be a $1 trillion company.
But here comes the argument from, I'm not a bear, I'm not a Tesla bear, okay? I just want to be clear out there. I'm not a Tesla bear, I'm not a rubber glove bear. I think there's a price for everything. And in fact, I very much love Tesla, and I think Tesla will definitely, at this point, based on the knowledge I know, autonomous driving, they are gonna eat the whole market already, because they're so far ahead of all the other people. In terms of the electric car also, I think it's very difficult for another competitor to come in because they have these economies of scale thing, including their autonomous driving and also their battery technology. They're always thinking how can they make the thing cheaper by innovating. I think they are very far ahead of all the competitor, very difficult to fight. Just that one thing is even if they become a $1 trillion company in 10 years' time, it's only a double, based on the current share price. Double in tech per annum is like 7% return only. So they need to become 4 trillion company for us to have a 20-30% return per year. That one I'm not. So that's why
maybe you can scale your entry line, whenever it drop, then you can buy again, because it's not gonna be a linear, right? It's not gonna be a straight line. So I just feel like it's a company that can definitely invest in for the long term. This is probably the real buy and hold company that I have. This Rubber Gloves is not a buy and hold; it's a thematic investment. But counters like Tesla, in my opinion, is a buy and hold counter.
But one thing with Tesla, I'm not so sure whether the share price will be as volatile as last time, because I realized that it's a big shift in the sentiment towards Tesla this year. For some reason, the fund managers have gotten in and they believe the story now. So it's not like last year where everybody shorting.
Let me correct you on that. I don't think the fund managers believe in Tesla. I think the retailers believe in Tesla. I think Tesla is very much a retailer story. Yeah.
They are still skeptical.
I think fund managers definitely are finally see the big picture, but the surge in Tesla shares is very much driven by retail, in my opinion, because if let's say, because Tesla feels like Tesla is like a Kim Kardashian of the stock market. Everybody is just talking about it, right? So when everybody is talking about it, everybody just looking at it, and all the retailers are just really buy the story, and it just went off the roof in terms of the price movement and the price appreciation. Yeah. Oh, and I actually have another theory as well. Maybe, I have a theory in the sense that what is how you perceive in terms of valuation, right? Imagine if, let's say, you are in the US, okay, and in the US, do you know what is the interest rate in the US?
0.25% for the base rate for the banks, but I think probably 1% if they are putting it in the bank.
If, let's say, you put into an FD, or maybe even in a 10-year treasury bond.
0.8%. I invested in the bank. Yeah.
Yeah, so what I'm trying to say is that, right, for people in the US, if, let's say, you are investing in a risk-free asset, you're only going to be yielding about less than 1%. If, let's say, you're taking that particular interest rate and you imply it into a PE ratio, that is basically a PE ratio of above 100, Okay? Yeah. So what does that mean? Because of, if, let's say, you're implying a PE ratio of above 100 on a risk-free asset, right? In terms of valuation of what is cheap, then this actually have elevated everything into the next level, right? So if, let's say, you imagine yourself as an American, if, let's say, you're not investing in stocks, what are you going to invest in? Are you going to just hold your cash and put it in the bank? Would you rather be stuck in a stagflation, in basically a negative real interest rate in terms of your purchasing power, right? Or would you rather bet on a techflation? A techflation is equity and tech, the tech equity, right? Would you be investing in like a growth game? Because, well, if for me, I would rather be doing that, because I feel like equity and tech is of more value in terms of their growth than a worthless fiat currency. That's another way of looking at it.
Yeah. And maybe next time we talk about crypto, but we don't have time for today to talk about crypto. But crypto is very interesting, because even Square, PayPal, they are now buying some crypto and they're accepting crypto. So that is a very interesting discussion. I really don't buy into a crypto story, but I may be wrong, just like how I was wrong with, not wrong lah. Like I don't fully believe that's not only so.
I think Meng Teck, you need to get your ass into cryptocurrency lah. Yeah, I finally believe in crypto story. Seriously, this year.
Hey, next time we have a discussion on crypto. Let me know.
I'm not the expert in it. I'm not the expert in it, but I'm not the expert in it. But I just see a fundamental change lah. You know, and I feel like there is a space for cryptocurrency and gold. Basically, any other commodities other than fiat currency in anyone's portfolio. Yeah.
Okay.
But that's another time. Maybe you can invite a crypto expert. I also want to understand more about it.
I have a few in mind, and I may invite them. So anyway, maybe another reason why Tesla is going up is, could it be because people finally see their car on the street and a lot of people using the car on the street and autonomous. That's why they're like, oh, finally realize the thing has materialized in front of them. Just like how the rubber glove, people don't believe, then now see the profit, they start believe.
Actually, that one I don't know. I mean, maybe.
Yeah.
Maybe lah. Maybe.
Maybe we take a few questions from the floor.
Yeah,
it's already 1 hour. Then in 5 to 10 minutes.
Questions. Yeah.
There are a lot of questions, man. If you look at the chat box, there's really a lot of questions. Some people are asking. YCO asks, what do you think of NIO?
NIO. Okay, I mean, I personally, I was very skeptical on NIO in the beginning. I was very, very skeptical of NIO in the beginning. As a matter of fact, I think I wrote something about NIO in StockBit. Let me just take a look.
And then later, maybe you can comment a bit on Apple Car. Right? Because somebody is asking, how do you look at Apple compared to Tesla? Maybe she's referring to Apple Car, which right now is just nothing is going on with Apple Car.
Yeah.
Yeah.
On NIO, I think personally, in the beginning I was very skeptical, but over time I get warmer into the idea that this NIO is finally able to overcome the production hell. You know, they are finally able to produce car with a gross profit margin. I think that is very important. It could be already an inflection point because in terms, I mean, making cars are not easy, you know, like making cars are difficult, right? And if let's say you are finally able to make money from producing car, that is already the big first step. And NIO finally had that. And yeah, I think it is a story that you can put into your watch list. But in my opinion, the valuation of NIO is expensive lah. Yeah. But it's definitely a legit story. Like I wouldn't even discount NIO compared to like a Nikola or something like that. Yeah.
How about Lucid Dream? There's like a new article saying what Tesla ex-engineer come out to compete with Lucid Dream. How about
there's a lot lah. I mean, like seriously, like SPAC, like there are a lot of companies that is. Sorry, go ahead.
GM and Porsche, is it how we say? I don't know. I'm not Porsche, right? Porsche already I can, right? And then I look at Marquis Brownlee review on I can. Bill Gates also driving it. I've seen somebody driving it in Malaysia as well, you know, and it's already on the road. What do you think as a competitor to Tesla? Because they have got the brands, the loyal following, and they are able to produce an electric car. Maybe not as efficient, maybe more expensive, but people don't mind paying because for the brand name or for the availability. Could it be a Tesla competitor? Could it be that Tesla cannot eat the whole market like people think?
Yeah, I think there is a big misconception, you know. Again, coming back to my earlier point, there is a big misconception where people feel like a lot of the electric vehicle, the so-called Tesla killers, are actually bad for Tesla. I beg to differ, and I feel like even Elon Musk will beg to differ because, again, coming back to the point, I feel like Tesla is in the electric vehicle market doing it as a mission statement, in a sense that he doesn't mind competition. Why Tesla actually went into China, and Elon Musk know damn well that when he goes into China, there is going to be definitely a lot of cases of a spillover effect from his technology into the Chinese, right? But he totally doesn't mind that. Like, he's not so selfish that he wants to keep everything for himself. He actually went to China because it is the biggest EV market. So he is taking all these challenges, all these newcomers face on, right? So again, coming back to the point, it is a mission statement. The more EV vehicles there are on the road, it is actually better for Tesla.
Okay.
It's just that you need to. Recently, there has been a lot of like all this SPAC. It's a similar thing like a reverse takeover where like an electric vehicle startup go and buy over like a shell company, right? And go listing into the Nasdaq, raising a lot of millions and billions, but they actually have nothing, right? So those are very dangerous, lah. You need to really differentiate which companies are valid and which are just a bluff, lah.
Hey, one more thing. This one you're gonna be, maybe you'll be like, let's shut down this point. One of the concern that I have with Tesla is Elon Musk seems to, maybe I'm a bad guy, seems to care more about spreading the technology more than making profit.
More than making what?
Profit for Tesla.
Yeah.
Does that bother you? Because it bothered me. What if he's like really so, what we say, so charitable that, go and use my technology lah, never mind lah. My goal is not to make money. My goal is to make sure, we have green energy, we save the world, at the expense of Tesla shareholder not getting a very good return.
Well, I think just as any company that is still developing, Tesla is definitely is not even close to maturity yet, right? Just as with any companies that is still developing, it depends on the approach that you are trying to. Do. Are you trying to make as much money and be opportunistic as possible right now, or are you trying to really give the market a chance for adoption of what you're trying to do, and then at the end of the day only start monetizing from there, right? So again, for Tesla, the business plan is actually very straight on. Like, it's very clear. Number one, try and give out as many cars on the road as possible, make it as cheap as possible. And the more these cars are driving for you, the more data that you collect for the autonomous driving. And the autonomous driving, you will have millions and billions of miles, and this will perfect your autonomous driving. And from your autonomous driving, this is basically where you can really make the money, because the margin, as I mentioned earlier, is fat, and the margin are recurring, right? It's just like Apple. It's a repeating story from Apple. So I think I am not too concerned with regards to making profit. That's why, as a matter of fact, when people are so excited that they might be included in the S&P 500, to me, whether they are included in the S&P 500 was not relevant. What is more important is the balance sheet. Do they have sufficient cash for them to sustain whatever that they want to achieve, right? And furthermore from that is, are they in line with what they are trying to do with their mission and their vision? So I think that is definitely more important than just showing a profit.
Now that you put it that way, I think you've got a good point, right? If I'm the company's boss, I rather break even on my car, not even make any margin, but later I make money from the software, and it's a recurring almost 100% profit one. That's where the is. Okay, actually, I got a lot of things to discuss with you, Lab, but we don't have a lot of time. Next time, maybe we can discuss.
Maybe now let me switch the table around now, because I feel like I've been talking most of the time. Why don't you share with me some good tips from US, man? Like what are the good US stocks? Like, I need some ideas too.
To one stock, I've not studied personally, but I asked my coach to study it, and he gave the green light. Like This is the first time I'm sharing about this stock. This stock is called True Leaf. It's a cannabis company. They specialize in making medical cannabis and selling it in US. And in the state of Florida, if not mistaken, they have about 60% market share. And now you are like betting on the growth and the adaptation of cannabis in US, right? If Biden wins, and he's more progressive, so there's a bigger chance that he may legalize cannabis throughout the country, which actually may not be a good thing for this True Leaf. Because one of the reasons why they're making so good profit and getting so big market share is everybody that wants to smoke cannabis, buy cannabis legally, they are flying to Florida. If you are legalizing it everywhere, then everybody is jumping into the game. It may cause pricing pressure. Then nobody will fly opposite to Florida anyway. But that is a good story. The legalization is a good story, just like what it happened in Canada 2 years ago. And this company has been growing like few 100% every year. Every single quarter, they are growing 10-20% quarter on quarter. They are not even glove stocks or what, it's a cannabis stock. They are very well executed, very fast growth. And the interesting thing is they are growing profitably. And now the valuation still seems very cheap for me, right? The only thing that I worry about is they have some accounting change, right? Whereby, they devalue the biological asset. I don't understand what it means. So that's why I need to verify before I go in big on the stock. So that is my upcoming hot stock, the cannabis company, truly. Yeah, that is one of them. The others will be some tech counters. Like C Limited, right now, if you ask me, that is my Tesla, C Limited, even though I haven't bought in big yet. I'm trying to scale in. But C Limited is my Tesla now. I still feel even at the current price, it's not very expensive, and it has very good future in the future coming, because they own Shopee, Garena, as well as C Money. C Money is like dormant almost, but the Shopee is really growing very fast.
Yeah, I also have C Limited actually.
Yeah. Square wise, I like it, but I think now the share price has overrun by a bit So I may be adding when it drops a bit. I think now people got nothing else to buy. So that's why everybody rush into the tech counters. Any counters that is growing, they rush into it. So I'm waiting for the time where they rush. That's where I go in big on those counters.
Techflation, that's a term that I just hear recently.
I personally, I think I've been investing a bit like old people. I've been buying into those contrarian stocks. One of my bigger holding will be a bank called Bank OZK, right? You may not have heard of it. Nothing special.
I heard about it. You mentioned it in your seminar, right?
Yeah.
Nothing special. That I was talking about Tesla in March.
Yeah. But this company, if you follow their quarterly result, still like every time I read their new quarterly report, I'm like super proud to be their shareholder, man. Very well executed. They are still having profit growth now, man. Despite all the impairment loss, they only lost very little money, and they still continue to increase their dividend. Walao. I feel like this company is like investment grade for me.
But so, how well do you know? How well do you know this, like Bank OZK and all that? Like in terms of the business, how well do you know the business of the US counters, lah?
For this particular company, they really disclose very whatever they disclose is in detail. So I think I know them quite well, right? Because all the numbers they disclose to you, that means like banks actually. This bank in particular is quite easy to understand, because all you need to look at is what's the interest rate that they are paying people, what's the interest rate that they are receiving from their clients, what's the risk profile of their loan, and from there you can know what kind of profit they will be making, when they will have profit growth, what are the possible risks. So this bank, if you look at across the industry, they have always been the reward of the lowest net charge-off. Meaning, of their loans that they give up, the bad loans as a percentage of their portfolio is the lowest in the industry. Always consistent. Yeah. So even now, also their charge-off ratio is very low. right? And most of you also have the moratorium period, but most of the people that took the moratorium actually start to pay back the debt already. They continue to pay without issue. So I see this company has been beaten down so much. Interest rate already bottom, I think, unless they go to negative. And they are starting to reduce what they pay the client in terms of fixed deposit. So after the adjustment period, I foresee this company to have profit growth as soon as next year, because the amount of cash in the bank has increased so much because of all the stimulus check and all these. So next year itself, they will have profit growth already. So a company that people think is depressed, like Bank Ozk, banks, nobody want to buy. The perception is so bad. Next year, when they give profit growth, I think everybody will be surprised. And I don't believe that everybody would look so deep into their financial to project where they will be making next year. It's a very followed company. So yeah, that's why I went into this stock. And the way I go in is through put option. Put option.
So
the
you
premium,
sell put.
sell put, but the premium is about 5% a month.
Okay.
So this selling put, I could make 60% every year from this stock,
Yeah.
But not be so high premium always. Yeah. Local banks, I don't know. Yeah, somebody is asking about Kelly is asking local banks. For local banks, I'm not that sure, right? Not that sure because local banks, I believe a lot of the bad thing haven't been factored in yet. But US, they are very fast. So that is one of the company. Bank Ozk, some tech stocks, and another one that I've been adding almost every week. I add one. I buy in the minimum lot 2,000 shares every week. It's a Hong Kong stock, right? It's a company called Naga Corp, right? Hey, right? Naga Corp. Yeah.
I know. I give you all the details of Naga Corp. What?
Yeah, man. Hey, if you read the latest quarterly report, they say their business is now back to 96%. I don't know how they did it, man.
That's crazy.
Yeah, I don't know how they did it, man. With the pandemic and international travel cannot do, their business is back to 96%. And yet
that means Cambodia doesn't need like China tourists.
No, they need just
China
tourists, so-called tourists, actually businessmen there that permanently stay there.
Okay.
Do business there. So that's why once they reopen, everybody flood in again. And right now, even though the profit, the revenue is back to 90-something%, the share price is still about 50% from the previous high.
Okay.
I like to buy stocks that nobody like, but they are actually doing well, but nobody know because they are like, all this rubbish throw aside. It's like, wow, doing very well. Yeah.
So how many counters do you have in Hong Kong and China?
For Hong Kong stock, only one. This Naga Corp only.
Right. You're not invested in Tencent as well?
No. It's about 20% of my portfolio, this Naga Corp.
Really? Wow. So that's your biggest holding, is it?
No, Bank Ozk. That's about 40 to 50%.
Huh? So two stocks are like 60% of your portfolio?
Yeah.
Wow.
For me, if I like a stock, right, if I'm really bullish, I can go 40, 50%. If I'm very sure of it, I can go up to 40, 50%. Yeah.
Okay.
And for me, if I want to go in like 5%, 3%, right, what's the point? If I don't believe to put at least 10%, then there's no point, so many stocks to monitor.
Yeah, okay, on that point, right, I feel like I agree with you in that ideally in a portfolio, you should only have maybe like less than 10 stocks. But somehow, I personally, even right now in my portfolio, I have about close to 30 stocks, and it is definitely too many lah. It's difficult to monitor all of them. That's why like the level of understanding on each particular business, as the size of, or rather the percentage of the portfolio is smaller, I don't really understand the business inside out. I have to admit that as well, and that is not a good thing. But I believe that in this kind of like uncharted territory of COVID-19, diversification is a good way of managing your portfolio. So that's why I actually have to brace myself having like 30 stocks in my portfolio.
Yeah. But I have also about 50% of my portfolio in Malaysia and some tech stocks. So those are for COVID stocks, and 50% is for after COVID stocks. Yeah, those who perform well after COVID. 50% is those that will perform well now. I swing trade the stocks now, like NTPM. That's about 10 to 15% of my portfolio.
Okay.
So,
okay.
yeah, last question before we end. How do you see Ant Financial? The IPO price is quite high, 80 Hong Kong dollar, right?
And financial,
I think
maybe I listen to your opinion first, Meng Teck. What do you think?
before I talk about what I think, let's talk about the minimum entry to buy the share, 2,000 shares minimum, 80 Hong Kong dollar. That's about 440 times 2 is 80,000 ringgit. Every entry is 80,000 ringgit. Am I? Yeah, every entry into this Ant Financial is 80,000 ringgit. So I think for most people, it's not affordable if you use a traditional way. Yeah, it's 40,000 ringgit. Yeah, for most people, it's not affordable. And I think they are not really targeting small retailers. They are targeting people with more money. So that the other day when you asked me, I have a look at the prospectus. I haven't looked at the pricing compared to the earnings. But when I look at the earnings and the revenue trend, all this, it looks quite good. I don't know whether it has been priced into the thing, but I think this IPO should be doing very well.
Yeah, okay, like for me, I actually subscribed into the IPO. I actually, I tried my luck, and mine is not the third tier. I actually tried to apply it in the second tier, in a sense that it is one step further up, even before the price was released. And the only reason is I was just applying it because of the hype that it is having. In terms of whether it is expensive, I do believe it is expensive. But even fundamentally speaking, I can't comment much also, because I have never actually tried Alipay. I have never been to China for quite some time also, and it's just what I see in the newspaper and what I see, what I hear online and stuff. But it does sound attractive, lah. It sounds like a big hype on that.
Have you studied Square?
Yeah, so I actually was wondering, how does that compare to Square, and how does that compare to like Stone Co in Brazil?
I think Square for China, but much bigger. They are like Square for China, but much bigger and much more powerful.
Yes.
The biggest risk with this Ant listing is Jack Ma, because the structure, the organization structure, the shareholding structure, if not mistaken, is very weird. Last check, it was weird, and they have to go through a lot of hurdle in order to list. The China regulatory has been giving them some problem. So that's the biggest thing with investing in China, Hong Kong stocks, with business in China. The China government can sometimes make you quite nervous.
Yep. Agreed.
I remember there was some stock. Yeah, I invested in a education company called China Maple Leaf. Initially, I made 50%. Then suddenly one day the share price dropped 20%. Right? Took away like half of my profit. Right? Why? Because China decided to add on a new regulation in the company. So I look at this trend. Cannot suka add a new regulation like that. Then it's very, very dangerous. So that's why I take the money out, put into something else better.
Right. Okay. Maybe just before we leave, I just want to revisit something that me and Meng Teck had the last time. I think the last time we had Facebook Live was about 6 months ago, right, Meng Teck? Yeah, it was 6 months ago, and basically we were talking about, we were wondering how we should pursue this particular downtrend in the market, right? And I think during that time, I did share with you, like, you need to come up with like a watch list, right? And maybe I can share my screen. Hold on. Can you see my screen?
Not yet.
Okay.
Maybe you can share the application window or something like that.
Yeah, hold on.
But from the audience,
do you remember this?
I can see. Yeah. Type in enjoy if you enjoyed today's sharing.
Yeah.
Yep. Maybe you can enlarge.
So I think what happened. Enlarge.
Is it possible? Yeah, Rondy shared your watch list
because this is from
right. Give out the Excel.
Yeah. So what I wanted to share here is it's just very simple. It's that I think about 6 months ago when Meng Teck and I went on Facebook Live, we discussed on how to go about riding through the crisis, riding through COVID-19 crisis, and I think my answer is that everybody should actually have their own particular personal watch list on as to what are the stocks that they would like to invest and nibble over this particular downturn, and what stocks to bargain hunt and all that. And I came up with this 40 watch list, and yesterday I was just going through again what has happened with regards to all the stocks in my personal watch list. And I think a lot of the stocks had actually done very well. If you average this, the return over the past 6 months is about 40%. Now, this is not to say that, this is not to show off or anything, but I just feel like this approach where, everybody should always have a strategy on how to manage their portfolio and how to manage their money and where to invest, right? And I believe in always having a watch list in a specific timeline will help you massively in your trading journey lah. Again, you can take a look at this in StockBit. I think I mentioned it over here.
Maybe I'll put up the link to your StockBit account. Yep, guys. If you'd like to look at the watch list, you can now go to StockBit and follow Rondy at his personal account here. Yeah, and he's actually very active in doing sharing. And a lot of the stock ideas that I get are actually from him. So I think it's really good. Once I know you, know Lucas, right? I can bounce ideas with you guys, look at what you guys are doing. It really makes my trading journey much easier.
So I know that, hey, Meng Teck, so yeah, maybe just last few from me, right? I know that you have been mingling around with a lot of the investment gurus as well, especially from the Chinese-speaking ones and whatnot. What is their, or rather, what's the general consensus with regards to what they feel they should do, or rather, like what layman investors should do right now? Now we are already 6 months post the crisis. How should you position your portfolio from now?
If I look at what the other gurus are doing, a lot are still very bullish on the rubber glove stocks, right? I feel like it has still got a lot of room to go. And everybody else is betting on growth. So everybody is rushing into tech stocks and rubber glove. That is still the trend now. And people believe
Do you think that's a wise idea?
I could be wrong. And I've been wrong so many times, so I don't dare to speak so much. But I personally am positioning for something that I'm more sure of, which is the end of COVID. Because maybe I've been ingrained by reading so many books to be a contrarian. So I like to go where people avoid and find some gems there. I think that is safer rather than chasing the growth stocks now. A lot of the growth stocks, yes, they are growing very fast now, especially because of the COVID helping them, boosting their earnings. Like maybe Shopee now have a super fast growth. Maybe some Fastly, CDN have fast growth. Maybe even Square. All these have very fast growth. But this fast growth is because everybody is rushing to to digitalize their stuff, But after this, will the growth rate be as fast? Definitely no, So you cannot factor that as a normal growth rate in the future, right? If you grow like 26%, keep growing double, eventually you're bigger than the world already. It cannot be. So I think you need to learn how to be aware of these kind of things. Don't always think that something that is growth will always keep growing. And it's not the first time. You look at tech counters, there are periods where they are doing very well, and there are periods where they are having earnings growth, all these and yet share price is coming down. So I think you don't need to jump all into them now. You can still go in batches. The most important is don't need to FOMO. Something has already gone up so much.
Yep.
Maybe it can still go up, but your risk is definitely way higher.
Okay. Maybe I'll just add a little bit about my personal viewpoint. For me personally, number one is right now we are actually moving into a very volatile market with all this political noise and whatnot, right? So I personally am trying to increase the cash position of my portfolio. That's number one. As a matter of fact, this year I have been selling a lot of stocks. I have actually been selling Tesla because due to the gains in Tesla and rubber gloves, I at one particular point of time I was so long in terms of the equity to cash ratio that I actually have to sell them. So doing the portfolio balancing, I had to sell some of these counters. But yeah, right now I feel like if let's say you have a portfolio, try and be prepared for some sort of a sell-off in the market, because historically when we see like the US presidential election, there could be some sell-off initially. So that's number one. Number two, I feel like especially in Malaysia, people should try and position themselves, not just be fully invested in Malaysia. I think there are a lot of companies out of Malaysia, in the US, in Hong Kong, and all that. I feel like in terms of diversification, you need to get out of Malaysia. That's number two, because the ringgit, our ringgit is it's a high risk currency in a sense that it can easily depreciate, especially with all these like political instability and all that. There are like noises about how the credit rating agency is going to again downgrade our sovereign rating and whatnot. All these are high risk into the ringgit. So that's number two. And number three is, I think you should be investing in it should be a balanced portfolio now, in a sense that you should be investing in companies that has very good earnings visibility, i.e. like the rubber glove stocks. And then you should also be you should try to tilt your portfolio into counters that has also both very good earnings visibility and at the same time has a good value. So these are basically your counters like Denons. I think Denons is quite good. What else?
Hopefully we can get the management.
And some Hong Kong stocks, there are a couple which are good as well. And there are some thematic investment as well, like for instance the furniture, right? The furniture stocks, actually they had a shift in fortune of late. So, and they're all very cheap, I think Homerates and Lehan and all that, they're all trading at X cash PE ratio of below 10. So maybe this can be of considerations as well. So those are basically counters with earnings visibility. Next is, in my opinion, personally for me, I'm right now shifting towards a lot more. I'm shifting also some portfolio allocation to like long-term defensive value stock, as well as like a little bit of like turnaround or like oversold bid down stock as well.
Maybe you can share some names.
Okay, like long-term defensive value stock, in my opinion, are counters that are like Johor Tin, counters that are like MFCB. I would consider MFCB as another one. And turnaround, beaten down stock. perhaps a counter like Petronas Chemical. Even in the US, you can probably take a look into like Booking.com or Walt Disney or these sort of counters lah. And yeah, and lastly, of course, in my opinion, you should have a portion of your portfolio as well in alternate investments. So things like Bitcoin and gold and this thing. So yeah, it should be like a well balance between cash and equity. And in terms of equity, it should also be spread out.
So you think that in the next few months it will be a bit more volatile? That you are more, you that's what you think in the next few months it will be more volatile, and it's wise to have some cash. Is that the point that you want to bring across?
Yes, and be invested in good fundamental stocks. I know that this year, especially in Bursa, we really have a very crazy hyper stock exchange like in the LSE, in a sense that so many goreng counters goreng like crazy. Also, like what the heck is happening to like? I mean, I'm not sure if you guys follow my stock bit, but we made like crazy amount of money from like HLT la, SRAM la, all this like Notion even, right? It's like, oh my goodness, beyond imagination kind of like return. You just close your eye, you hit also, you like it just goes up like crazy. And yeah, but I think it's about time now that things are starting to slow down. Volatility are coming up again. And it's good to be defensive once more lah.
Okay, thank you for your tips and outlook. I think this is a super value jam-packed sharing, man.
Thank you to you, Meng Teck.
Thanks to you, actually. So next time, I hope the next time we do a live will be with Denounced Management, or else then maybe one day, few months later, we can revisit again. But yeah, interesting idea on picking someone with expertise on crypto to share his view. I'm also very interested. I don't see right now at this point. I cannot see the case, like really solid case for crypto. And even if there is, which one should we pick and what platform? That's a really new market. But I've seen so many people started to go into it. Even people that in the past were skeptical, now they start to be bullish. So that's really interesting for me. And I think it's
like me lah. I think for me, I understand very little about cryptocurrency, but there is just like a big shift in the fundamental of demand and supply. Like how can you have an unlimited supply of fiat currency, right? While limited commodities such as gold and Bitcoin and all this sort of thing, they're still on par in terms of value, right? So I think that is where the discrepancy is, and I feel like over time people will start to realize this. So actually that's a very simple explanation on why I enter into Bitcoin. It's just Bitcoin, and you can go through. Yeah.
Why don't we long go? I actually long go via eToro. I think it still have plenty of upside to go. Every time after a crisis, there will be a super bull.
I do have gold. I'm invested in a gold ETF with the ticker of IAU. It's it's steady lah. I'm not making like 30% out of it. I'm only like it's a slow low double digit, but I just feel a lot better with this diversification in my portfolio. It just makes sense to me.
Okay, so thank you everyone for staying all the way. It's almost been 2 hours. Actually, this can become too live, man. Yeah, but every time we have you, it's a super jam-packed. Okay, have a good evening. Thank you very much for sharing.
Thanks, guys. See you guys around.
Thanks. See you guys. Bye.
Bye.